G'day everyone. Today I am speaking with Larry Liu, the founder of a new soon-to-be-deployed Layer 1 network called Dango that wants to upend the market of on-chain trading. Mate, thanks for coming on the show.
Hey, Tom, thanks for having me.
Your background. You originally spent, 9 years studying biochemistry and pharmaceutical sciences only to drop out of your PhD in the final year. Talk to me about your entry into crypto and what spurred you to drop out and pursue this industry in the fifth year of your PhD.
Yeah, so I bought my first Bitcoin sometime in 2020. I was originally feeling unhappy with the fiat currency system. So I was in touch with the gold-backed community, and it may be surprising to somebody, but gold-backs are not all like close-minded boomers who despise Bitcoin. I mean, there are some open-minded people, and I got into crypto basically through those more open-minded gold-backs. Yeah, so, and I also took some time to learn to code, initially just as a hobby, and then also as a alternative career path, because the job perspective wasn't looking great for biochemists. So I did some open source work, and they were noticed by who later became my first employer. So it's a VC firm called Delphi Digital. So they noticed some of my open source work, and they hired me for their next project. So that's how I got started. Yeah, so I spent 9 years in chemistry and biochem, so 4 years in undergrad, 5 years in PhD. So I was quite close to getting the PhD degree, like half a year to 1 year, but I decided to drop out. And I'm Asian, and if you know one thing or two about Asian parents, is they really value education, and dropping out so close to getting that like final crown jewel of a natural science PhD was like the stupidest thing they could imagine. Yeah, but to me, job perspective wasn't great, and also I realized that was in 2021. That was a time I feel there's gonna be very, very soon a paradigm shift in biochem, in pharmaceutical sciences, and I feel my research wasn't catching up with that trend. So that trend, of course, is the application of data science and machine learning and AI, big data, and combinatorial synthesis, gene editing, all that stuff. And our research was lagging behind. I don't think what I did at the time was gonna be something that we will still be doing 10 years, 20 years in the future. So I just didn't see a point of continuing. So yeah, that was up to that point the biggest risk taking I have done in my life, and definitely looking back, I think it's the right choice.
Fantastic. Yeah, it's always hard explaining to parents, hey, I'm dropping out of this to pursue this kind of like crazy new thing on the side. I remember telling my parents I dropped out of law and journalism to do philosophy and economics, and they were like, no, those are two very employable degrees. Don't do that. But yeah, so before we get stuck into Dango and crypto side of things, you talked about kind of like AI, machine learning, data science disrupting your field, and that was 2021. So that's kind of, at least for the mainstream, before AI was very much in vogue and was going to replace everything as we know it. What does the impact of AI look like in that field today? Has it continued on that trend that you saw happening, or is it still floating along?
Yeah, AI is but one of like 5 or 6 major trends at the time, but it was probably the most impactful. And it may surprise you, but the mathematics underlying drug discovery, that's what we do, and AI are actually tremendously similar. So if you don't know what happens when you train an AI model, is you define a model first, like usually it's neural network based, like of course the most up-to-date model is the transformer. So the model contains like billions of parameters, and then you define a function that measures how bad the model works. And then you use another algorithm to tweak the numbers in the model to reduce the value of that function. So the function has lower value, means the model works better. But in drug discovery, what happens is there is already a function to measure how bad a drug is, and that is the total potential energy in the system. So that's derived from physics, right? In AI, it's from a system called information theory. You define that function. But in in drug discovery, we just use the potential energy of the system, because when two molecules interact, it releases energy. So if you want to maximize interaction, you minimize the energy. So we use the same algorithm, gradient descent, the same algorithm that you use to train AI models. We use that to tweak the configuration of the molecule. So I remember the Nobel Prize. It's either last year or the year before. I couldn't remember. Was given to this guy called David Baker from the University of Washington. He was really making a lot of progress. Like, he's pumping out papers in top journals of Nature Science back in 2020 when I was about to quit. So so everybody at the time already agreed, oh, this is going to have so much impact, and this guy will definitely get Nobel Prize, and surely it did. So basically, what we were able to do with this new approach is called de novo. De novo means from scratch. De novo molecule design. So traditionally in drug discovery, what we do to find drugs is we synthesize millions of molecules and basically just try each one of them with a target protein we are interested in. But now we can just design molecules from scratch without actually getting your hand dirty in the lab. And of course, synthesizing a molecule takes time. Doing a computation simulation in the computer takes very little time. So that's a lot faster. So so there are so many trends. There's not molecule design, as I just mentioned, and there is mRNA discovery. So instead of synthesizing molecules, that's 10 to the power of 7. Right now, we are able to do something like incredible amount of molecules, like 10 to the power of 18.
Yeah,
that's just unfathomably big amount of number. And also there's things like gene editing. There's PROTAC, that's targeted protein degradation. There's just so many new things, and I'm really confident that a lot of the diseases we so far cannot cure will be cured, like cancer. Cancer is actually the easiest because we know very well how cancer works. I'm very confident cancer will be solved. Some diseases are more difficult because we don't understand how they work, like type 2 diabetes, like Alzheimer's. Those are going to be more difficult, but I'm very confident. And that was 5 years ago when I quit. I wasn't really following the field things, so I suppose a lot must have changed.
Okay.
I'm very optimistic.
Cancer's first on the list. That's good to hear. I feel like it's one of those ones that everyone would like to be gone. So that makes a lot of sense. I'm not sure if this is in your wheelhouse at all, but like, where do you see, because you obviously have a very good idea of where AI is impactful in your field, but are there any other fields out there that you see AI having like a massive impact on that the mainstream hasn't caught on to yet?
Well, this is a little far-fetched, but the single biggest risk facing humanity is the birth rate problem. It's not climate change, it's not inflation, it's not economic nuclear war or whatever. I think the biggest issue is the birth rate problem. And how do we solve birth rate? Well, a lot of people say, oh, I cannot have kids because I don't have enough money. I'm not convinced that's the problem. But in any case, if we are gonna solve this problem, so I don't think it's a money issue, so we cannot just do that by giving people more money. So I think AI is one thing. AI will free people from labor, give them more time. Fusion energy will make everything so incredibly cheap. and longevity technology will simply stop people from aging or dying. So, yeah, I think we have maybe one or two, at most, one or two generations to solve all these three issues. Maybe we will fix the birth rate issue. So, yeah.
No, that's interesting. I feel like
super far-fetched.
no, it's good. No, it's good. I think
Yeah.
it's funny because
Yeah.
the birth rate issue I feel like is almost being made worse by AI at the moment with like kind of like the AI companion bots and guys just checking out and being like, all right, fine, I'll get an AI girlfriend. But again, that's for that's like Elon with Annie being like, we need to fix the birth rate. Here's a Guna porn slop bot that everyone can use. By the way, go out and procreate. It's a funny kind of like misalignment of incentives there. But okay, enough on AI, enough on all of that. Talk to me about Dango from a non-technical perspective. Like imagine I'm your Uber driver and you've just told me, oh yeah, by the way, I am starting a new blockchain. Explain to me how that works and what it is.
Yeah, Dango is a new layer 1 blockchain. We are targeting the DeFi use case. So it will take all the things that have proven over the years that have product market fit in DeFi. We combine them all together into a coherent experience and push them to the limit in performance and experience. So that would include a on-chain order book that has a spot exchange, spot margin, and perp exchange. There will also be passive yield, like vaults where you can deposit and earn passive yield. And that's going to be our first-party apps. We're also going to have third-party apps that form a ecosystem of applications.
So I read through your Twitter thread on Dango and like a couple of other resources that you've put out there, and you've talked about how the like upcoming like decentralized exchange built on Dango wants to replace like automated market makers, so AMMs, with central limit order books, CLOBs, CLOBs. What are the main benefits that come from running on CLOBs? And like, why isn't everyone doing this already?
So CLOB is not a new thing, right? It's new in crypto, but in traditional finance, it has existed for centuries, and that means centuries of work have been put into improving this type of exchange. So it's a very mature, trial and true venue for trading. AMM, however, was created back in 2020. I think it was like Vitalik posted like a post on Reddit that created this new kind of trading venue, but it was not created to improve CLOB, but instead was to create an alternative trading venue that can run on blockchain, because blockchain was so resource limited. It does not have a lot of bandwidth. It cannot do a lot of computation. So it is more like a sized down alternative that can run in very limited resources. Yeah, so even when we go back to the beginning, it was not designed to be a better form of trading venue, but more like a compromise, given how low performance blockchain was at the time. But today we have much better blockchains, so there's just no reason to not adopt the tried and true centuries old trading venue that is CLOBs. And that is okay. Exactly what we're looking. We're seeing these days. We are seeing new CLOBs spring out everywhere. We have Hyperliquid, we have Lighter, we have all these new exchanges. You're not seeing people building Uniswap V5 anymore.
Yeah.
So I think this just naturally what will happen when blockchain continues to scale.
So AMMs were very much designed as like just kind of this healthy compromise for really low compute kind of blockchains of like, okay, we've got really limited block space, really limited kind of like throughput. We don't want it to get it insanely expensive. We'll just run a fucking AMM, see how it goes. But CLOBs are much more efficient. And now that we actually have super high TPS throughput blockchains, we can be like, all right, cool, let's run it on these. Gotcha. Now, I've also read some of your stuff where you're talking about how you want to, in a broad sense, replicate some of Hyperliquid's success in democratized market making for perps, but instead doing this for spot markets, which you believe like Hyperliquid kind of left as a bit of an afterthought. Can you go more into depth on how Dango works and what problem it's solving in the crypto space today with relation to that?
Yeah, so I need to go back to a little bit of background in order to explain
Please.
this. So I just talked about how AMM is like a worse version, worse kind of trading venue. But there's actually one aspect it does better, and that is anybody can provide liquidity, and they don't need to do anything. They don't need to stare at the computer and adjust their position every minute. You just put money in, you set and forget. But that's not possible on order books or CLOBs. To market make on CLOBs, you have to have first of all a very sophisticated strategy. Like you need a mathematical model to take in all the parameters in the market. So if you look at professional trading shops, they have like teams of math PhDs just to do this. Like the regular retail users like you and I just cannot compete with that. And also you need very good internet infrastructure. You have to be fast. You have to be responsive to all the new information. Like Federal Reserve did something, some company released new products or financial reports. You have to be interactive. You have to respond very, very fast to that. Otherwise, you're not going to make any money. And these things are just not possible for retail investors. This is like $1 trillion industry, market making, that is traditionally not possible, not accessible to all the retail capital. So Hyperliquid did something. They invented this thing called HLP, where you can deposit USD stablecoins into it, and basically the Hyperliquid team will take the money and make a market make on their exchange and give you back all the yield. So this was very meaningful in two aspects. One is of course, for retail users, this is a new source of income, of yield, and this is also very beneficial to Hyperliquid, because Hyperliquid did not have to enter into contracts with external market makers, which can be very expensive. So if I'm building an exchange today and I don't incorporate anything similar to HLP, I would have to contract an external market maker for them to provide liquidity on my exchange. And they can charge me very high fees, like for example, some percentage of the gross revenue of the exchange. And without these external market makers, the exchange simply isn't useful. There's no liquidity. But Hyperliquid, thanks to HLP, didn't have to do that. So they are able to distribute almost 100% of their revenue back to their tokens, token holders, and accrue value to the Hype token. So Hyperliquid only do that for the spot market, but we want to also do that Hyperliquid only do that for their perp market, but we also want to do that for the spot market. So if you have some BTC liquidity lying around, we have a place for that where it can work for you. And I also have to mention that a unique feature that we put in our market making vault is the resistance to this thing called toxic flow. So toxic flow describes a kind of trading activities that exploits the time difference. So maybe there's a new news coming out that will increase the value of an asset. An arbitrager is able to respond to that very quickly, but average traders will maybe respond by a few seconds too late. In this case, the arbitrager can utilize the difference in latency to do arbitrage. And by doing that, it can siphon value out from market makers, and that includes our market making vault. So we engineered our system to be resistant to toxic flow. So if you look at the yield and return from Uniswap V3 pools, they are generally not profitable despite doing a huge amount of volume, and that is because they suffer from toxic flow. But we are resistant to that. So we are going to do maybe less volume because we are discouraging toxic flow volume, but we have a better perspective for yield because we're not losing to these arbitragers which are not considered beneficial to our markets.
So over the years, we've seen a lot of kind of like L1s come to market that have, promised all sorts of different things. At a high level, how is Dango different from other L1s that have kind of launched and just invited third-party developers to show up afterwards? What's the different approach that Dango is taking here?
So if you look at other projects, what they do usually is first of all, they reserve a large percent of their tokens to their foundation. So they're going to call it like ecosystem or community, like 30-40%. And what they do is they tell devs, hey, come build on our chain and we will give you 1%, 2% of all these tokens. And experience have shown us that the outcome of this strategy is very, very poor because those developers are usually missionary. They're not coming here. They're not staying in the ecosystem for long. They just take your tokens and they maybe just fork another open source project, fork Uniswap, fork Aave without really understanding their code base, deploy that on your chain, and then they're done. They just took the money, dump it, and gone. And often because they don't understand the code base, they may get exploited. So that's what happens when you use this strategy of just giving out tokens, giving out grants, right? Everybody suffers except for the mercenary devs. So we don't want to do that. But we look into history. There are two projects that was able to foster a huge developer community without doing any of that, and those are Terra before it crashed and today's Hyperliquid. And the reason they managed to do this was just really simple. They have users, they have liquidity, they have yield. So, developers ultimately want to make money. Like there's nothing wrong in that. So to build an ecosystem, ultimately we need to create an environment where developers can make money. And that includes having existing users, being able to direct those users to third-party apps, having liquidity, having volume. So once you do these things, developers will come. You don't have to pay them to come, right? So that's what we're trying to do. We are building a highly performant trading venue that deters toxic flow. That should build up good volume. We are building these passive liquidity pools to ensure there's always liquidity, and we are building a single portal where you can access all the apps, both our first-party apps and the third-party apps, that will help our third-party devs to distribute their application. So basically, we instead of spending our resources just giving out grants, which is not effective, we want to concentrate our resources on fostering a good environment for third-party devs.
With Dango, and this is something that I'm not sure if you can answer this one publicly, but are there going to be so first of all, is Dango going to have a native token? And second of all, will that be distributed to like early users of the chain, in a similar way that other protocols do, where they kind of reward early users for getting on the chain and playing around with it, providing feedback?
Yeah, so we will have a native token. It will be a value accrual token. We expect to be just like Hyperliquid, where a vast majority, like over 90, close to 100% of revenue generated on the platform will be distributed to the token through buybacks. And the token will not confer any governance rights or gas fee or any utility like that. It will be a purely revenue generating token. And we do plan to distribute a huge amount, a major percentage, meaning at least 50%, probably even 60, 70% to the community. And our early adopters, including who have played with our testnet and complete the tasks, quests we have created for those testnets, will have a major advantage in earning the airdrop than those who have not. So
Okay.
we are not yet ready to announce exactly what those advantages are, but we can promise that the advantages will be significant, because something I've always liked to say is that as developer, our interest aligns with the interest of our early adopters. If our early adopters get rich, we have a much bigger chance of succeed. So we will craft a points and rewards program that significantly favors our earliest adopters.
Awesome. You've said elsewhere, I think it was on another podcast, that the quote, like fun factor is what's missing from DeFi today. How do you, that, it's an interesting take to hear that, because I think that like that is true. Like the days of DeFi summer are over, and now it's become a lot more complex and kind of convoluted. How do you intend for Dango to bring the fun back?
Yeah, so I'm a big fan of DeFi summer. That refers to the period starting from about July 2020 and the around 1 year following that. So that period was characterized by a huge of new projects spring up, and it's not like today where every project looks all kind of the same. Back then, everything is new. Like every project is new. Every day there's completely unheard of new protocol, new primitive coming out. So incredible amount of innovation, incredible amount of experimentation, and everybody's having fun. So it's unlike today, like you have to, like I was backed by A16Z, backed by Paradigm, we have raised $100 million. It was not like that, right? Anybody and random anon in his basement come up with an idea and spend 2 days coding up a smart contract and release it as a project, and tens and hundreds of millions will rush into that project. Anybody can succeed if they have a good idea, have a good execution. Unlike today, you have to have like big money, like big propaganda machine, just to have a chance. So I'm a big fan of that time. So what we do, well, first thing is, as I said, we want to foster an environment that is good for developers, so that they can be encouraged to come and experiment on Dango. But on the other side, of course, we just chose this branding. Something happened in DeFi summer was you have a lot of food coins. So there's
food coins.
Sushi swap, there's yam finance, there's pickle finance, and so on and so on. So we picked a Japanese snack. So Dango is a Japanese snack as our name, and we also chose a very lively, funny, happy, cartoonish visual identity. So hopefully that reminds you of the good time back then.
Awesome. All right, we're bringing back DeFi summer. Let's go. You've been running the Dango kind of test nets in like multi-week sprints, in like these little blocks of like, okay, we're doing this time around, go play around with it. When's the next testnet going up? And like, where do you kind of want to point people to if they want to go play around on the Dango testnet?
Yeah, so the next testnet should be the end of September, beginning of October. So we are probably going to call it testnet 3. It will add the missing features that we didn't have time to implement in the previous testnet, and it will also add new things such as you can actually bridge testnet tokens from other chains. Yeah, and a lot more refined experience using the app. And that will be the final testnet. And we are expecting mainnet by the end of October.
Okay.
Yeah.
Damn.
So just if you want to try it out, just go to dango.exchange. Right now, the website says it's under maintenance because no testnet is running. But if you really want to try out the most cutting edge Dango experience, you can go to dev.dango.exchange. That's our internal devnet, but anybody is welcome to come play it out. Just be aware that our team will probably reset and reboot the testnet very often because that's how development works. So your data will be lost. It will not be persisted. So it's just for those who really want to stay on the cutting edge and see what we have been cooking.
Okay, awesome. So if you run up like a really massive fake P&L or just like imaginary P&L on Dango, it will get wiped. So beware.
Yeah, so
no, it's good.
Dango.exchange for mainnet and testnet, and dev.dango.exchange for our internal testnet.
Okay,
Cool. Internal devnet. Yeah.
Internal DevNet. All right, cool. I'll go check it out. So a little bit before, you were talking about how you, worked on Terra. That's an interesting one because, I feel like everyone else remembers the Terra crash in a variety of ways. I was actually on a surf trip and I remember checking my Binance and seeing, because I had a lot of Anchor protocol at that time. Mm-hmm. And I remember I'd been out of reception for a few days and I looked at my Binance and there was just a phenomenal amount of money missing from it. And I was like, wait a second, what's happened? And it was about, I think a few $1,000s that I had in Anchor protocol had turned into about 8. And I was like, oh shit, okay, something's happened. What's going on here? And then for the rest of us, it was just kind of remembering that from the now infamous Steady Lads tweet from Do Kwon. But as someone who built, you had like a $200 million protocol on Terra, as someone with that protocol sitting on Terra, what was that day like for you? I want to hear it from your end.
Yeah, so the Terra crash is undoubtedly the single biggest, most impactful event in my life so far, both personally, because I was personally, financially took a hard hit from that, and also professionally, because it basically killed my project. As I mentioned, it's called Mars Protocol. It's a lending protocol. It had more than $200 million of TVL at the peak. It basically got killed by that crash. So it was over like the span of only 2 days. I basically went through the 5 stages of grief over that 2 days. Like in the beginning, I didn't believe it because as a builder on Terra, I know there are a lot of value. Like there are a lot of builders, so many passionate users, so many projects experimenting new ideas, and those new ideas are not all linked to the value of Terra stablecoin or Anchor protocol. So I was like, even if Anchor protocol goes to zero, Terra USD go to zero, there's still value in the ecosystem. Like, if the investors are rational, they're not out of their mind, this thing will not go to zero. This thing will go back. That's what I believed. But then I watched Terra USD going from 0.8 to 0.6 to 0.4 to 0.2. I was proven wrong, and I have to readjust my belief. So I said I went through the stages of grief.
Denial?
I have
No.
I have never. I have checked the price chart more than the rest of my life in that 2 days. I have checked the price chart more often than the rest of my life combined. Yeah.
Just refreshing CoinGecko and being like, no, no.
Yeah. So I lost the project got killed, but we were very proud that we had no more than a few $100 of bad debt throughout the crash. That is extremely remarkable achievement. Like this is the total apocalyptic scenario for any lending protocol. It literally cannot be any worse. But our smart contract worked well. Our bots worked really well. There was no bad debt. No more than a few hundred. We were able to clearing all 200 million. I'm very proud of my team. Personally, I got hit, very, very hard hit. My net worth lost I lost about 97% of my net worth. I actually live tweeted the entire experience on Twitter. Please don't look up those tweets. It's pretty cringe to look back on. But I lost 97%. I actually posted a chart on Twitter. Like, yeah.
Dude.
Yeah. So I had my money in Anchor Protocol. It was I said I didn't sell. I had 2 days of chance to sell UST. I didn't do it because I believe it will go up. When it went to 0.2, I finally decided, well, it's not going up back again. I'm going to sell it. Then I deposited it to Binance, and I deposited the wrong bridged version. So there are multiple bridges. So I had to. There are multiple bridge protocols. I deposited the wrong one, so I actually had to talk to Binance support, and they took like 5 business days to refund me, and UST already went from 20 cents to 2 cents. Yeah.
That's actual nightmare scenario of like, fuck it, I'll transfer to Binance and get rid of it.
Yeah.
Wrong one.
Yeah. So I mean, these things actually like affected our product decision. Like on Dango, we're actually gonna have this thing called alloying, meaning you can have 10 different bridging protocols, but they will appear on Dango as the very same token, so you will not make the mistake.
Okay.
Of course, there's a trade-off. Like all the bridging protocols have different risks, but we mint the same token, so the risks are socialized. But I think this is a worthwhile trade-off, just for the improvement in UX. And another lesson I learned from this was I had a few $1 million, like mid 7-figure of Luna. It was locked in a protocol. So if you remember back then, Curve invented this new thing called VE Curve, which involves locking tokens for multiple years. It was like the meta at the time. So there was somebody doing the same on Terra. So I locked my Luna tokens and wasn't able to sell them at all. So on Dango, there will not be any sort of lockups. I have concluded that lockup is beneficial to no one. Nobody likes it. Users hate it. So there will be no token lockup, no staking on Dango. So yeah, you see, like all these live events, they all have impact on our product vision today.
Okay, that's cool. It's great that you've kind of learned especially from like the developer end, it's like you actually have the ability to change this moving forward. You're like, okay, we're not going to run that same playbook. Interesting. And now I understand that after Terra kind of came crashing down, you like had a go at forking and moving over to Cosmos, but kind of like later nixed the project because it just, Cosmos Eco is not what it once was. Now, Cosmos has become like a bit of a meme in crypto now. Like I remember seeing a post that was like, the second best day of your life is installing a Kepler wallet, and the best day of your life is deleting it. And I was like, fuck, okay. But I do want to get kind of the inside opinion from someone who's actually built on Cosmos. What is it that went wrong there? Because I speak with lots of people that talk about, oh man, Cosmos could have been so fantastic. Like Cosmos should have been like the ecosystem where everything took off. And I think everyone in crypto has that kind of period of their life where they think, oh yeah, Cosmos Eco, like this is it. I did it with Tia staking, so that's my own personal run-in with Cosmos. But yeah, in short, what went wrong with Cosmos, and why didn't they become more of an ecosystem than they are?
Yeah, okay. So first of all, Cosmos got all the ideas right. And that is remarkable. Like app chain is the way to go. Hyperliquid has proven that. I think app chain is absolutely the right idea. And it is remarkable that the founders of Cosmos were able to predict this back in 2017. As early as 2018, 2019, I think they did the ICO in 19, so the white paper was out in 18. Like it's just incredible how much talent in Cosmos there is. Like the Cosmos white paper is the most underrated thing in crypto. In 2018, they did the first production-ready proof of stake consensus engine. They proposed the light client-based bridging, which we all use today, and they proposed the app chain vision. And all three things are incredible. So many years ahead of time. So like the brain behind of this is Jay Kwang, who is undoubtedly a genius, not always mentally stable, but he has some problems, but he's definitely a genius. Yes, but it didn't play out. There are so many reasons I can talk for an hour of it, but let's just see what I have on top of my mind. First is the community is fragmented. Builders are fragmented. Like on Ethereum, you can have Uniswap, you can have Aave, you can have Maker, and they all have a sense that they are in the same. They are bounded together, right? A lot of value are derived from the interop between those protocols. So they support each other. In Cosmos, you have three chains. You have three chains that hate each other. They don't like to collaborate. They are competing. There's no sense that they are building some bigger thing together. So the entire thing is fragmented. There's some level of corruption in the Interchain Foundation, which is the foundation that are mandated to build the ecosystem. Like the rat founders are not being supported, while those are supported tends to be the friends in a close circle, and they're not bringing the right amount of value to the ecosystem. And the third thing is about tokenomics. So I actually tweeted this a few days ago. There are three major mistakes made in the tokenomics in Atom. These are not things laid out in the white paper. They are probably just one developer just arbitrarily chose these things like back in 2019, but they had profound impact on all the chains because those three things are shipped in the Cosmos SDK. So other chains just by default adopt those things. And those three things are: one, the tokens are perpetually inflating. So what they do is they want to incentivize all the tokens to be staked. So the more tokens staked, the less inflation, but the less token is staked, the more inflation. But there's always a perpetual inflation. And that, of course, is bad for the price. And two, there's on-chain governance. Token holders will vote on things. And I think that is not the right way to run a startup company. Like a startup company should be led by a visionary leader, not thousands of people who don't know each other and cannot agree on a thing. So I think decentralized governance, I'm not a fan. I don't believe in decentralized governance. I think it is a distraction, not a value add to a Web3 app. And the third thing is that vesting accounts, their tokens are vested, but they can stake those tokens, earn those perpetually inflated staking reward, and sell them. So VCs can still dump massive amount of tokens despite being vested. Yeah, I said those are just three design decisions back then that seemed very, very minor, but had profound impact on Atom, and they were inherited by pretty much all Cosmos chains just because they are the default in the software, and nobody cared to change them. So yeah, those are the things I have in mind.
Okay, interesting. I am really interested in what you just said about decentralized governance, because I feel like there'd be a lot of people in crypto that would disagree with that, of like, no, like the decentralized governance is the whole point. And it does remind me of a funny, I'm not sure if it was a tweet or a post somewhere, but it was basically that DAOs stands for dudes arguing online. And I think that is kind of directionally correct in how decentralized governance works at a high level. There's other areas where I think it's beneficial, but I'm interested in your take. You said that decentralized governance is an impediment rather than a benefit. What's the go there?
Okay, so I want to clarify myself. I'm not talking about all decentralized governance. I'm talking about token-based direct democracy governance.
Gotcha.
I'm not a believer of direct democracy. Well, the other form of decentralized governance we have already seen in crypto times and times again is a free market-based approach, and that happened when Bitcoin Cash forked from Bitcoin. The free market chose Bitcoin. When Ethereum forked from Ethereum Classic, the market has chosen Ethereum. So these forks will freely compete in the market, making their own design choices, making their own features to attract customers and developers, builders, users, and the free market will make the choice. As a libertarian, I'm a libertarian. I think that is the better form of decision making. Yeah, so there's a meme, not a meme, a screenshot from the founder of Hyperliquid, Jeff. He said, "If you don't like what we do, you're welcome to trade elsewhere." I think that is how you should build a startup. You should have a visionary leader with a strong will to push through his vision, and users will choose what is the best for them. The market will choose what's the best for them.
Okay, dude, it has been fantastic having you on and having you explain your new venture to me. If you can explain it to me, you can explain it to anyone, so well done. Where can people find you and Dango on the internet, on social media, and what do you want them to go do once they're done listening to this podcast? What's the first kind of pressure point you want people to go check out?
Yeah, so I am Larry0x on Twitter. Dango is just Dango on Twitter, or dango.exchange. That's our website. Right now, there's not much to do as we don't have a testnet running, but we will have one soon by the end of the month, hopefully. So yeah, try it out. Join our Discord server and send us your feedback. We also have a campaign for yapping on social media that's in collaboration with the Galaxy platform. So definitely check that out. If you want to talk about Dango on social media, there's a chance. So yeah, that's all. Thanks.
Awesome. Larry Liu, man, thanks so much for coming on the show. Really appreciate it, man.
Yeah, thank you, Tom.